Welcome everyone. Welcome to the CoinRock Show. It is Thursday, and look at these. Look at how much red in the market today. The bubbles are red, guys. Anyway, welcome. We will get going in a few moments here. Type in one. You know the drill here. Type in one and like, share the stream. We'll do a about half an hour of market recap news, and then we have a special guest today. Very interesting conversation. I think, you know, what's interesting with these guests is there's like a few themes that we want to cover, but aside from a few bullet points, I mean nothing scripted, right? So it's like, yes, I have an idea of the overall theme. But what makes it very interesting is that, and let me actually push this out. Should be good. All right. So what's interesting is that I want to keep these conversations super organic, just because I think it's more interesting than having like something too scripted. So with that being said, let's give it a few moments here, and then we will get going. Let's push this out, share this in different groups, especially the mods here. Special guest on the show. There you go. So let's have a look at this, and then we'll get going. Welcome. It is Thursday, guys. We have about we will do. I'm just talking to the team here. Let's hide this like this. Let me go back up here, actually, because we have. Let's send this to the team here. This is. Six. We'll start around. Yeah, this is the. All right, good. Thank you. Thank you to the team. So, guys, today we didn't stream yesterday, so we did not stream yesterday, and so we have news from Wednesday, so late Tuesday, Wednesday, and Thursday. And despite what's happening, so I had a very interesting call with I'm usually on anywhere between 5 to 15, sometimes 20 calls a day. Not something to brag about, because I actually don't enjoy being on calls all the time. It's just you know, necessary for the scale at which we operate and what we do and how much we're building and how much we have going on at CoinRock. We have some news we have a lot of news actually internally at CoinRock. We have a new partner. For those who we pushed out a tweet yesterday. Lucas Demos, Blockchain Boy, is a partner. Like there's it doesn't get more official than being a partner, right? So as a partner at CoinRock Media, it's going to be he's been with us since day one, early Q1 last year, when there was nothing, when CoinRock was just an idea, even before we got the actual domain name. So, you know, he's involved with every project that we have, and it only made sense. It was a no-brainer to say, okay, let's bring you on. Let's make you a partner of CoinRock Media. There's going to be a lot happening around everything that we're doing at CoinRock. As you guys know, there's a lot going on. I had a very good meeting yesterday with a very good friend in the industry. Not just a friend in the industry, just like a good friend, a very good friend. And it happens that, you know, we met through this insane, crazy industry that is crypto. And so we put together like a Google Doc internally to just run through all the updates that we have going on at CoinRock. There's a lot of stuff that's been happening internally that we have not marketed at all. And so what's happening now, what's interesting looking at the market is that anything that's being marketed now is is not getting any traction. So you can't fight the macro. You cannot outmarket or market your way to success if the macro, in this case, crypto. So how the macro affects crypto. Just the overall sentiment is choppy. Look at the price here. Do we have two bubbles? We have two green. Curve is one and ton. I mean, the rest all red. Let's have a look at the other ones. This is in the top 100. So, I mean, look at this, right? Not a single segment of the top 1,000 is green. Remember, we talked about this, right? I've been saying this for months now. After Trump came in, there really is no immediate now real bullish catalyst. Now I talked about the kingmaker trade that would happen, that I strongly believe will happen when, not if, when we get two things. First of all, crypto really depends on liquidity. Simple as that. Liquidity in the system. The more money there is in the system, the better crypto does. When there is less liquidity in the system, when the Fed tightens, crypto doesn't do well. And so we had we had Matty Greenspan on the show the other day. Great conversation. We posted the recording yesterday, I think. I think everyone should check the recording out. What's interesting with him is he has a background in TradFi. So he was senior at eToro for years. Is not pure crypto native. So he's on the older side, like me. And so what's interesting is having that perspective, always having someone that shares kind of my background, which is, yes, growing up with crypto, but not crypto being the only industry we've been involved in. And so, in the previous cycle, most of you guys know, do you guys know Plan B? Plan B is a very large crypto account, crypto Twitter account, CT account. And let's have a look. What's the handle? Is it Plan B? Plan B. Plan B. No. Yes, it's Plan B, and it's at 100 trillion USD. So he came up with the model called with a model to kind of quote predict the Bitcoin price, and he called it stock to flow. And so, that raised a lot of questions in the previous cycle because the targets were not met. And so then it's a question of like, does the model, is the model not valid? Did it break? Does it work? Does it not work? And so, Matty had a very good comment about that. The stock to flow model is flawed. And I agree with that. The only model I look at, and if you look at historically, global liquidity, that's what you want to be looking at. So is it the only element? No. Is it overwhelmingly, does it have an overwhelming influence on the price of Bitcoin and crypto? Yes. So liquidity. So when we get QE, right? Remember last week, the Fed reduced QT. And so it hints at QE coming up at some point. Is it next week? I don't think so. Is it in a few months? Probably. But again, we might chop. I've been saying this for months now. I said after the Trump election, the Trump trade is kind of over right now. Meaning, Trump being pro crypto. Every single day, every show we do, I show you these headlines, and I don't think we'll have time to go over all these headlines. I want to go quickly over a few here. I'm not making anything up here. I'm literally showing you the news. We talk about the news. Of course, I give you my opinion on the news too. But I've said this for over 2 months now. I said after Trump, it's gonna be choppy. I pinned this to my Twitter account, Twitter profile. I said back in November 11th, I said 98K BTC. I said 85K, and then back to 120K plus, and that's when real FOMO and real interest starts. So I tweeted this on November 11th. It was very obvious to me, and when you put out these tweets, welcome everyone. Welcome to the CoinRock Show. Quick re-intro, because of course the algo now is spreading, reaching more people now. So if you just joined, we will have in about 25-30 minutes, we have Anish, who will be joining us for the CoinRock Show. We're going to be talking about AI, crypto, of course, DeFi, and we'll see. These conversations, as you guys know now, happen very organically. It's a lot of fun, so we'll see. But that's going to be happening in about 25-30 minutes. In the meantime, we're just having a look at the news, covering kind of what's been happening over the last day or so, because the last show we did was Tuesday. And so I said, coming back to what I was saying about in November, I said after the Trump trade, pretty much there's no real bullish catalyst, right? And that's what we're seeing. The market needs news. So talking to one of my friends who's a CIO in TradFi in a hedge fund in London, his view is, we talk about this. He's like, okay, how is it on the ground in crypto? Because of course they're interested in crypto. I don't think he's allocated yet to crypto, but definitely more interested to the funds, the let's call it TradFi funds, have never been more interested in crypto as an asset class and digital assets as they are in this cycle. So that's very, very bullish. And so, one thing we came up with is TradFi, so stocks don't need overwhelmingly bullish news all the time to go up. They, if you look at the chart over the last year, 5, 10, 15, 20, even the last 20, 30 years, stocks tend to do well, even if it's not always super bullish. And with crypto, if it's neutral, so the difference is with crypto, when there is neutral news, we tend to chop, right? Crypto tends to chop and tends to go sideways and creates fear. It's very easy to go from like neutral to risk off and then sell, and then price drops. Stocks don't behave that way. And so it takes a lot more negativity for stocks to drop. And of course, crypto, when sentiment is lower, or when we're in a risk off phase, I mean, that you see a choppy kind of bearish pattern, right? So look at the price. 86K today. We're at 88, 89K maybe Monday, Tuesday. 86K today. Choppy, nothing new, right? Everything is down. Again, not a single segment of the top 100 here is green. So nothing new. If you guys are on the show and you watch the CoinRock show, you know that this is exactly what I've been saying for weeks. And so until we have more certainty on three things really today, I've been saying this for weeks too: tariffs, QT/QE, and interest rates. Until then, we're going to be choppy. Do we go down to the 75K level? I don't think so. I mean, I don't think we chop down that low, unless if there is bad news, like something, not a black swan, because black swans would drop probably lower, as we've seen, during COVID. So do we chop between 80 to 95K? Yeah, that's what I've been saying for weeks. And until there is something bullish on the macro and more certainty, crypto will do this. We'll have a few days of up. And again, it's not all catastrophic, right? The headlines are actually bullish. Let's have a look now. But we will range. We're going to be ranging for a while here. All right. So let's have a look here. Welcome to everyone who's joining. Let's have a look at some of the... let's have a look at some of the headlines. And before that, let me actually do something on the phone. What do you guys think of the Ghibli? It was interesting seeing the last what was it, 24 hours, like the Ghibli studio. I thought it was very interesting to see the creativity on the studio Ghibli designs on CT. And I saw maybe the head of Ghibli Studios imagine an old Japanese man with imagine like a Nintendo game, and in that game you see an old Japanese man who's an artist. Picture him, and that's exactly who he is. Just like this genius artist, either the head or one of the heads of Studio Ghibli, saying, um, being basically just extremely bearish on AI, not bearish on AI, but more bearish almost on humanity. Of like, this is the end. So this is a video from a few years ago, and he's saying, hey, this is the end of, like, you're destroying art. Like, AI is destroying art. And I get his point. He's from a different generation, seeing all the work that you have to do to get an animation, like a one of the Ghibli studio films done. That takes years. I saw something. Let me see if I can find it quick here. If not, if you type in Ghibli, go to Twitter and type in Ghibli Studios 4-second animation. Yeah, so this is crazy. So have a look at this. Let's see if I can pull this up here. Have a look at this, right? You see this? So Ghibli Studios, have a look. Since Studio Ghibli is trending, worth noting the mind-boggling effort Hayao Miyazaki and his team put into film. Each has 60 to 70,000 frames, all hand-drawn and painted with watercolor. I actually didn't know that. This 4-second clip, called The Wind Rises, took one animator 15 months to do. In the documentary 10 Years with Hayao Miyazaki, the legendary Japanese filmmaker talks to one of his animators after they complete the crowd scene. This exchange is gold. Miyazaki says, "Good job." Yamamori, so the animator, says, "Oh, it's so short though." Says, "Yeah, but it was worth it." This is 4 seconds, and it took them 15 months to do, right? And so anyone can go now. I've been using ChatGPT. I'm sure there's other AI tools that do it too. But anyone can go to ChatGPT and literally upload a picture, right? I'm sure you've done this. And this would have been impossible even like a year ago. Just the level of the quality just wasn't there, right? And so now it's if you've looked, have a look at your feed and type in 12 like movie, Ghibli studio movie, and you'll see they did some let's see if I can actually scroll, go to the profile and see. I'm pretty sure we should find something here. Profile, you should see, I saw one about the Lord of the Rings. Whoops, let's go to home. So they basically animated. Oh yeah, there you go. What now? Interstellar, right? What if Interstellar was a Ghibli animation? Oh, this is like a look, unbelievable. Like, it's a full video. I think it's gonna be slow on the stream here, but yeah. So they're actually using AI to recreate these clips or these movies. Unbelievable. Anyway, I thought that was pretty cool. Let's have a look at some of the news here. I'm not going to go over, we don't have time to go over everything because we have Anish joining us in about 20 minutes. Just want to show you, so we have a lot of news about new stable coins. That's one of the new I'd say the almost like a meta now, right? So stable coins being super bullish, and actually stable coins being bullish, and the question is then, how do you trade them? Stable coins to $1. So it's like, yeah, I'm actually surprised by how much interest there is in stable coins. This is not even counting CBDCs, which the EU is rolling out by the end of this year. Actually, a bit. I'm not bullish at all on CBDCs. But again, Fidelity reportedly nears stablecoin launch as firm eyes blockchain-powered money fund. So, yeah, Fidelity plans to launch a stablecoin. I mean, there's going to be hundreds, maybe thousands of these stablecoins. I think that it's going to be almost like a not. I mean, we're going to be in a. There's going to come a point where there'll be too many stable coins. You can already see every other company trying to come up with a stable coin, gold backed or this backed or reserves backed something, right? I think that it's gonna go from USDC, USDT, which are the two main stable coins, to hundreds. But it will also be, I mean, it's gonna be interesting to see how it plays out. If it's a winner takes all. The thing with stable coins is the key is distribution. That's it. It's actually very simple. It's very complicated, meaning it's very difficult to get distribution to the level that USDT has, and USDC, USDT both really have dominance in this in the market. So then the question is, do you trust other stable coins as a user, right? Let's say you swap your USDT for USD something. You trust it? I mean, if it's a new stable coin, how bullish are you? Would you hold hundreds of thousands or millions of dollars in stable coins? Would you hold 100% of your portfolio in USDT or USDC now versus a new stable coin that comes out? I don't know. It's a game of distribution. And so of course it's very easy for these guys who have distribution, right? The big funds have distribution. But again, what is the benefit for the end user? Really is the question. We'll see. Right now they all have, again, the two big names, right? We covered Tether almost on every show and USDC. Those are the two big players. We'll see what happens. Trump launched on BNB, I believe. I saw a headline the other day, also a stablecoin. So I know we have a headline about this. Let's see if we have another one about another stablecoin. So you can see over the last probably 2 months since we started the first show here. You see these phases, right? You see you see what pops up. We haven't really covered stable coins outside of the Tether FUD. I think it was last week or 2 weeks ago, where of course Tether now is getting actually in April, I think, removed, if I remember correctly, removed from EU exchanges. So to pave the way for an EU CBDC by the end of the year, yes. And USDC is still operational in Europe. So there's a lot of action on in the stablecoin world. Elizabeth Warren accuses President Trump of using stablecoin bill for personal gain. What a wonderful woman she is. I would love to have a conversation about crypto with her. It would be amazing actually to actually ask her, because she gets a lot of hate on social, of course, in the crypto world. She literally headed and was one of the main voices for Operation Choke Point, by the way. So it's always difficult with these politicians because you don't know if they personally hate crypto or if her donors hate crypto, or maybe love crypto, but just want crypto to be massively controlled. And so, but she's always so angry, always so bitter about crypto. So I'd actually would love to talk to her on. It would be funny to actually talk to her without any notes on her end, without any aides around, kind of whispering answers, and just have a conversation. And ask her, why does she hate crypto that much? Is it her? Is it the donors? Of course, it's a conversation that, as a politician, she could never have because she has to protect the interest of. Politicians are hired technically by the people, right? They work for the people. Of course, we all know now that it's more of a meme and a joke than anything, and they actually work for the donors. So she has been so anti-crypto for years, very close to Gensler and the former SEC team. They have served hundreds and sent thousands of letters to founders that I personally know, projects, founders, to threaten them, debank them, And so now, of course, any opportunity that she has to go against crypto, she will seize. So Elizabeth Warren has escalated her criticism of a proposed federal stablecoin bill. Warren pointed out to Trump's association with World Liberty Financial, so that's Trump's DeFi project, basically, a decentralized financial protocol that recently announced the launch of its USD1 stablecoin. Oh, it was both ETH and BNB. That's why I was a bit surprised it was only BNB. So ETH and BNB. This is Donald Trump's latest grift to enrich himself. Congress should step up and fix the current stablecoin bill moving through the Senate that will make it easier for Trump and Elon Musk. Now she's like completely, of course, she's always been anti-Trump and anti-Elon Musk. You know what's funny is I saw something that she has a net worth of either, there's two numbers, either $80 million or $200 million. And the question always is with these politicians is, you make around I think it's around $220,000 a year. Let's say 250 gross, right? $250,000 a year. How can you have a net worth in the hundreds of millions of dollars? How? And so it's always very funny to see politicians who are on with, by the way, this is not coming from, I don't think she's running businesses. I don't think she's not an entrepreneur. She literally is a politician. So it's not like she has time to run businesses and, and lead teams and scale operations. So how do they make money? I mean, I think we all know how they make money now, especially now with Doge, so the Department of Government Efficiency that Elon Musk heads, and just has been sharing with the public how corrupt and fraudulent the government can be, and how much aid, quote aid, was actually being just sent from the government to an agency or to a quote charity, then funneled back into politicians' pockets. It's just it's good for the world, especially for hardworking Americans, to see that, wow, this is what the government was doing with our money. So always interesting to see politicians talk about this when she has, again, you can Google this, like, so net worth of in the tens, upper like tens of millions of dollars. I think it's probably around over 9 figures, so over 100 million. Yeah. So again, but what's interesting here is stable coins. There is interest. I think I saw another headline here. There you go. Wyoming. Again, we didn't see this earlier this year, right? About stable coins. Now over the last week, there's like headlines every single day. Wyoming moves to issue first state-backed stablecoin as July 2025 launch. That's quick, like 4 months from now. Wyoming's push to launch a state-issued stablecoin is gaining traction, with officials revealing that the Wyoming stablecoin, WYST, is now in active testing across multiple blockchain networks. So this is beyond the ideation stage. The announcement made during the DC Blockchain Summit underscores the state's determination to be the first in the US to deliver a fully reserved fiat-backed digital token. Remember, we talked about this. We talk about this almost on every show. We talk about game theory. They want to be the first, right? Florida was extremely pro-crypto a few years ago. Then Texas came in saying, no, we want to be the crypto state. Then you see Wyoming. A few days ago, we talked about Arizona launching a, what was it? So many headlines. Arizona launching passing a bill to legalize or to make mining basically more affordable. So they want to attract miners and Bitcoin investors, which also means crypto, of course. Because now when you talk about Bitcoin, notice that it's not only like the Bitcoin reserve, it's really like the digital asset. It's they're putting everything in the same basket. Of course, I think that I talked about this actually several weeks ago. I said there's probably going to be two. This is before they announced the strategic reserve. I said there will probably be two. There's going to be a Bitcoin strategic reserve and like a other, like non-Bitcoin digital assets. So one of the 51, 52 states in the US to have to push, like they want to push for a stable coin, and they want to be the first one. So if there's one, Wyoming was always very interested in crypto. We also know that now, of course, Arizona, Texas, what was it? I think Delaware too, but Arizona. What other states we talked about? So Wyoming, Arizona, Texas, Florida. There's at least a few, like several other ones that just are moving extremely fast. What's going to happen is, even if the other states don't want to touch crypto, they will need to get involved. And so it's better for everyone. It's better for if you're invested, it's good for you. So we have 3 headlines about stablecoins in the last day or so. Let's have a look at DeFi. So this is a change in what. Let's not cover this one. GameStop. So we need to. So for the team here, we will get going with Anish in about 10 minutes. 10 minutes. For those who just joined, welcome. We have we're just doing a quick review, short review of the news, and then we have Anish joining us on the CoinRock Show. We'll talk a lot about. I think, like I said, AI is his. He has a lot of like deep knowledge about AI, so we'll talk about that, and of course, crypto, blockchain. GameStop to raise $1.3 billion in convertible debt to buy Bitcoin. So literally using the sailor move to buy Bitcoin. And the move announced just one day after GameStop revealed its intention to allocate part of its treasury to Bitcoin reflects a fast-track strategy under Ryan Cohen that mirrors tactics used by MicroStrategy's Michael Saylor. What's going to be interesting here is everyone knows that the GameStop business model is dead, right? I used to, as a kid, when we used to travel to the US, I used to love going to GameStop. This is like PS1, PS2 era. PC games, CD-ROMs, before DVDs. This is like Nintendo 64 era with the cartridges. Dreamcast, N64, PS1. And of course, there was no internet. And so GameStop was like heaven. You would go and just like the magazines and just, hundreds of video games, and you could play. It was amazing. But right now, of course, it's a completely dead business model. And so I saw short positions on, so short interest, right? So new short positions taken over the last 24 hours. Do we see a new GME squeeze? Because it wrecked a lot of major TradFi funds a few years ago. So we'll see. I think that, so the other question then is, does GameStop become essentially a new strategy, like a new MicroStrategy business where they just buy Bitcoin and that's the business? And so you would buy GME, the stock, you would own the stock to have more volatility and then owning Bitcoin. We'll see. Interesting. Of course, high risk, but that's pretty much what Saylor has done. That being said, GameStop is a non-viable business, like the business of GameStop. So we'll see if we'll see how that goes. But again, crypto in the news, Bitcoin in the news every single day. These are global headlines. Let's have a look at, oh yeah, this one. There's 2 headlines I want to show you guys. This one was interesting too. BlackRock, this is today, literally an hour ago. BlackRock expands digital asset division, set to hire 4 senior executives. So let's take a step back here, right? BlackRock is not a crypto fund. Like, they are literally the masters of the universe. The biggest, with Vanguard, they basically control the highest level, the highest AUM in the world, around 10 trillion, sorry. And so they are the poster child of TradFi. That being said, they go where the money is. And so, of course, so Larry Fink, the CEO of BlackRock, has been the best salesman for Bitcoin and crypto, not just Bitcoin, but digital assets. So they're expanding the team. BlackRock has posted 4 new digital asset job listings, expanding its internal crypto bench at a time when Wall Street's interest in blockchain-based finance is growing. When you see this, how can you be bearish on the future of the industry? I really don't get it. Like you really have to be, again, I say this every single pretty much on every single show we do. I say that if you need to reduce your positions and sell your crypto today, do it, but don't panic sell. If you think that crypto is going to zero, fine. That's your belief. If you think that seeing all these headlines is bearish, no one can help you. Like, you need to get your brain checked. This industry is going up only. Choppy at the time, choppy in the short term. In the next 1, 2, 3, 5, 10 years, this industry and the players getting involved in this, they don't get involved for a quick flip here. This is not like a 3-month job for them. This is moving. You have to understand that these mega groups, right? The masters of the financial universe, you have to think of them as like big, massive cargo ships, oil tankers on the sea. They're slow. They're slow to get motion. A lot of levels of management and legal, checks. They have to make sure that everything lines up well. It takes time. For a traditional finance fund to allocate to crypto and Bitcoin and to move into digital assets, if they're not Web3 and crypto native, it can take them between 6 to 18 months. It's not just like buying on Coinbase overnight. It can take time depending on what type of investments and partners and investors they have. It takes time. And so there's no upside for them doing it for the short term, for a quick flip. And so think of these mega funds as big oil tankers, very different to you as the individual investor, or like even if you have a VC or crypto fund, you can move quickly overnight pretty much, right? You can deploy millions of dollars within minutes or hours. These guys take months to deploy. And when they deploy, it's jobs, it's building completely new divisions. And so this is mega bullish for the mid to short term. I can't emphasize how being bearish now, unless if you're trading and you're looking for like a scalp, or you think that Bitcoin drops to 81, 82, even 75, fine. I'm not interested in that. I'm interested in the long term in the industry, mid to long term. So this is insanely bullish. And the last thing I wanted to show you guys was this one. Again, think of incentives, right? Life, business, everything we do in life depends on the incentive. And there's a classic quote from Charlie Munger, one of the brightest and sharpest thinkers and best investors in history. The co-founder and partner of Warren Buffett at Berkshire Hathaway, he said that, show me the incentive and I will show you. Let me show you the incentive and I'll show you the results. Let's see, Munger quote about incentive. If you have a dumb incentive, you get a dumb result. So show me the incentive and I will show you the outcome. Those are his words. Show me the incentive and I will show you the outcome. So every single person involved in crypto at this level, Trump's SEC chair nominee Paul Atkins discloses crypto investments ahead of hearing. So as you guys might know, every Trump nominee, every political nominee has to go and basically get approval from is it the Senate or the Congress? I always mix the two in this case. Paul Atkins, Trump's nominee for the chair of the SEC, has disclosed. Yeah, let's have a look at this. It's the Senate confirmation hearing. Do you guys know how much he owns? Because he had to disclose this. And I saw this. I was like, oh my God, this is so, like, I think you guys don't understand how bullish this is. The new head of the SEC, who will basically be guiding regulation, clarity, and deregulation too, but bringing clarity to the industry, disclosed a family fortune of more than $328 million. Okay. According to a Reuters analysis of ethics documents released on Tuesday, Atkins holds between, say, 500K in equity, a crypto custody firm valued at over $3 billion. He owns call options at Securitize. His portfolio also includes a stake ranging from $1 to $5 million in off-the-chain capital, an investment fund focused on blockchain assets. These holdings are part of a broader financial portfolio, etc., $327 million with exposure to crypto. Do you think that, let's have a look here. He also joined the advisory board of the Digital Chamber in 2020. Though, of course, he has to step down. So, of course, for conflicts of interest, they have to step down, right? We saw David Sachs needing to divest and sell some of his holdings a few weeks ago. It's just that's how it works when you take on when you are a politically exposed person. So, the main point here is Paul Atkins, Trump's pick for SEC chair, holds up to $6 million in crypto investments, and he has been on the board of digital asset projects, companies, and company. So projects and companies. Do you think about this? If you're bearish on the industry, do you honestly think this is a bearish move? No, of course not. Like, this guy literally owns crypto. Why on earth would he regulate or put anything in motion that would go against his investments? Makes no sense. Again, coming back to the Charlie Munger quote, show me the incentive and I'll show you the outcome. This is yet another headline. We've seen hundreds over the last several months here on the show that shows that this industry, this cycle is different. You have politicians owning crypto directly. You have regulators owning crypto directly. This market is going up only in the next few years. Is it choppy now? Yes. Do you need to survive? Yes. Is this bearish? Are we seeing bearish headlines? Depends on your time horizon. If you're trading the 1 minute, sure. If you're focused on building your wealth, diversifying your assets into digital assets, and making and having exposure to this industry, there are very few industries right now that have this much upside with this much approval from some of the biggest masters of the universe. Again, I'm super bullish mid to long term. I hope you guys understand this. I do understand that a lot of bags are down, but overall, this is super positive. So that being said, welcome to those who just joined. We're going to take a quick 3 to 5 minute break now, and we'll be joined in a few minutes by our guest today, Anish. I can see you online, Anish. We'll take a quick short break. I will mute myself, and then we will get you on and get going on this conversation. And see you in, just looking at the chat here. We'll see you in the next few minutes. Looking forward to this conversation. Stay on. We'll be on in a few minutes. Hey, Matthias here, and if you're enjoying this and want access to even more alpha, early stage deals and opportunities, and also behind the scenes insights on the markets, hit the link in the description and make sure you're subscribed. It's free and it puts you ahead of the curve. Let's get back to the show. Welcome, and yeah, this is gonna be fun. I'll do a quick intro and then let's just dive in. So we have about 2 to 3 guests a week on the show. And what's very interesting with your, I want to hear about, I want everyone to hear about your story. But what's interesting with your what you do is, Anisha's involvement with AI, crypto, and DeFi, and I think those are very hot topics. We've had a lot of people who are like real AI people, right? Not those who just picked up ChatGPT a month ago, but those who've been in the industry for years. My business partner Justin started working in AI over 10 years ago. And so, we've had some very, very good guests who have real experience and expertise in the space. And of course, now with it being mainstream, there's a lot of interest. So, uh, welcome to the show. This is your time to just go ahead and just, the floor is yours. Where'd you come from? What's your story? And then let's just dive in.
So again, thank you for having me. I was born in India, southwest of India, called Kerala. So I went to med school, I had a degree in medicine. Then I went to grad school to do cryptography. Then I did some stuff in a B school. I've mostly been working, largest chunk of my time I worked in security and cryptography. In between, I was like a consultant and for Accenture and Capgemini and a retail banker for Lloyds and HSBC. So if you think about tech in terms of ML and other related bits, been involved in the cloud since 2007. So I was one of the people involved in writing up the Cloud Security Alliance guide, moving to the cloud, sat on the ISO committee, the same thing for big data. Then I did a bit of robotics. When you say drones, that's what it means. So from like 2009 till 2016, I was actively involved in an open source project called Copter. Then in between, I got involved in crypto as we see it. So early 2011, 2012, I ran into Amir Taki, and we ran a workshop in mining Bitcoin in Hackerspace in London. 2013, I became an advisor to Ripple. When I happened to know a bunch of people on the Ethereum team, so they asked me to help. So I reviewed the Ethereum audit paper or the Swarm paper, whatever you call it.
Yeah,
being part of the team till 2018. So in between, I designed or did design review for probably 20 odd protocols. The well-known ones are Ocean, Boson, Pillar. Then ZK has been a long-standing interest of mine, so hence my handle.
yeah.
So I got into non-interactive ZK like 2015, around 2015. So I am on my third ZK startup. It's called Panther Protocol. It's privacy for DeFi. And if you talk about ML, I've had a very long interest in ML. So I gave my first Strata talk in 2012. So that should tell you something.
Yep.
And I've actually been a guest lecturer at CMU, gave a bunch of lectures in privacy preserving ML. I also taught ML for finance grad course during lockdown because I got so bored. That's a bit for you.
What's yeah, so there's a lot to dive into, right? It's like, where do we want to take this conversation? We could talk for hours about especially like about I think let's start about the crypto. Like, you were very early. I didn't know about the mining Bitcoin early, like 15 years ago. So I want to walk through that, how that was, because some people were kids when you were mining Bitcoin. What was it like? What was it like going back?
So one bit I forgot to mention, I've been on Ski.Crypt since late 90s. So when cryptography mailing list happened, I think like a friend of mine runs a mailing list called a Silk List. So the owner of Silk List happened to be, and this person, his name is Uday, he's from India, and I met him on Ski.Crypt. Ski.Crypt is a Usenet group. I think it's still around, but this is like 30 years ago.
Yeah.
So, I ran into they added me to Silk List. In Silk List, I met the guy who owns the cryptography mailing list. So I got added to the cryptography mailing list.
Yeah.
The cryptography mailing list. And when thing came around, I read it. I was on a flight when I read that, and I was like, this requires everybody to believe in this shit. Not happening.
Yeah.
Let me go to other things.
What was what got you, like, what was it that caught your interest when it comes to Bitcoin specifically when you first saw it?
Oh, it's a very simple story. The story is that when I left med school, I told you I went to grad school. In between, I used to work for Ericsson in Sweden, in Stockholm to be more precise, on a micropayment system called Yalda. I was told that it's Swedish for money. So when you work on micropayment system, one of the biggest challenges you have, and the funny thing is we were using feature phones, right? We had client-side certificates. And if you think about it and you map one-to-one, the only thing that's missing, everything in the wallet behavior is the same, is offline validation, right? As in like you being able to do things offline. And that's what Bitcoin answered. Like, to me, that was like, okay, amazing. But this is a small caveat. The caveat is everybody else need to believe in what you believe in. Only then it's going to work. Otherwise, it's not going to work. So, see, that was like, real breakthrough. Like, I've been involved in, so when I joined Ericsson, so like I was pretty new to payment systems. So I spent a lot of my time learning. So I used to read every paper that comes out. So for me, I knew like every paper that's published. So I left, and then I went to grad school to do cryptography. Learned a lot more cryptography in those years. And then I suddenly see this and go, wow, somebody has cracked the nut.
Yeah.
But, this nut requires everybody believing that this nut is uncrackable.
Yeah.
I hope you understand what I mean. Yeah.
Yeah. What's the, so between Bitcoin and Ethereum, right? Several years go by. What were your thoughts on how it had evolved from inception, and then of course seeing more, Litecoin being like the silver
Color coin.
Yeah, exactly. Yeah. So my story is I heard about Bitcoin very early. I lived I was in LA between 2008 2010. On Saturday mornings, I was invited to these small, now it's very popular now, but these small, it was called Metal, and these tech groups with founders,
I think I've been to one of them.
Nice.
Brock. Either Brock or what's the other guy's name? There's another guy who runs the marketing.
Ken?
He had a kid. No.
Metal, Los Angeles.
So I used to be on the board for Hyperloop TT.
Okay.
So the chairman for Hyperloop TT invited me to meet the board in August in 2017. So when I came there, he took me to this thing. I clearly remember going to that place. It's a very dark place. It's like a club from outside, and there are lots of people side by side.
Yeah, I don't know how it's evolved, but like Ken Rutkowski is the founder of Metal.
I think I met Ken.
Yeah. So 2008, I went a good like 10 to 15 times, and it was amazing. Like you had like very old school OG.
It's a small set of people.
It was tiny at the time. It was maybe 20 to 30 guys.
And
someone
probably 30, 40.
Yeah, someone mentioned Bitcoin and crypto, and so that's when I first heard about the word. Too young to really understand the impact or the potential impact on the financial system. That was during the 2008 crisis.
Oh, wow.
So it was it was very, very early. And then coming back to Litecoin, 2013, one of my senior developers told me about Bitcoin and crypto, etc. So I also faded because I was like, well, I'm not sure where this is going. long story short, so if you found out about Bitcoin and really believed in the vision initially, how were the years between, so leading up to ETH, which I think is one of the biggest milestones too, of course, when it comes to mainstream adoption outside of Bitcoin? What happened? How was it from, inside the industry?
So I should say this with a lot of clarity and honesty. So I had a day job. This was among a bunch of interests I had. So as I was telling you, I was involved heavily in the cloud.
Yeah.
I was involved heavily in robotics and drones. So I used to run the drone meetup group, and I also had, for a period in time, moderated in DIY drones. I used to do hardware and a loop simulation. Then, and I had a day job, so I was doing consulting. So, I look at these things and I go, very interesting. Adoption is the key. And, because my background and having worked in cryptography long enough, I knew a bunch of people. So Hal was known to me, as in like who Hal was known to me, right? And and a few other people were known to me. And Amir was personally known to me. And like a couple of other devs were known to me. So, there's a bunch of geeky people. Very few of them actually have real cryptographic background. So it's this has been a bit of a challenge at that point in time. The hardcore cryptographers wouldn't test them by a barge pole. People who are more from what I call the cypherpunk background were interested and willing to help, but not willing to cross the threshold, as I would describe it. Like very few people actually left their day jobs to go do this, right? So my interest was, this is very much an academic exercise of mine, very much something I'm interested in doing and working on, but it doesn't pay my bills.
Sure.
Can't pay for food, right? So I'll spend my time doing all those things, help everybody, but I'll keep my job. So, 2011, 2012, Hackerspace. So we organized this workshop. You can actually go on Hackerspace's website and see pictures of me. And I saw him recently in DEF CON, and we were talking about this to somebody else. I can't remember who it was. And we were saying, and all the guys have disappeared, literally disappeared from the face of earth. I suspect they're all mined. So at that point in time, you could actually use a GPU to mine. And if you had mined it up, you could pretty much go live anywhere you want. So when in between, I ended up going to this place called Singularity University. So one of the early seed investors of Ripple was there. And he told me, look, there is this possibility of a CTO job for Ripple, if I remember correctly. And I'm like, I would love to. There's no real job. Like, if I get a job working in crypto, that'd be amazing. So I put my CV in, and by then they had hired Stefan. Stefan wanted me to be an advisor. So October 2013, I became an advisor to Ripple. So, cool. I used to fly in, sit down. He was one of those early people in Bitcoin. And if you know, he's one of the people who taught other people Bitcoin how to manage wallets. And he lost one of his wallets with significant sum of money, like more than our life saving, like literally, right? So he's a very open guy, I would say, to a degree that I would call him a chain agnostic in some sense. There were few of us who were chain agnostic. We will work on multiple things. So when Ethereum happened, it was the case of, I knew Vinay, because Vinay used to talk about Hexayat, and I used to talk about drones. So we used to talk about conference. And when Ethereum was a thing, so funnily enough, apparently Vitalik was an intern at Ripple while I was an advisor, but I've never seen him in the Ripple offices. I've met him at one of the events organized by Ripple in 2018. He came there and we were talking, and Stefan was, he just ran in, and Stefan was talking to me, and like, we're saying, all those things, all the background story in that sense. So also, I should also mention that Codius was a smart contract language that was being developed in Ripple, which never saw the day of the light, right? So there was lots of things happening. There were other people working on colored coins and things like that. And Vitalik
so you worked at Ripple?
Yeah, I was an advisor for Ripple, yes.
Very cool.
2013 October. So, a lot of the interesting events when it happened, for example, Stellar. So I was literally in Berkeley when that happened the same day. So I was at a thing called, I don't know if you heard about this thing called Effective Altruist. They now have a very bad name, but
Yep.
at that point in time, they had a much better reputation.
Mm.
And a lot of the people, well-known people in that sense, like who contributed to things were there. So when I was at the workshop, then the person who looked after fundraising for MIRI, which is a Machine Intelligence Research Institute, I also forgot to mention one thing to you. So I am interested in ethics of AI, and it so happens that I'm a director of one of the charities in the UK. It's called EthicsNet. I'm one of the two directors from 2013. Okay, so just to be clear, so I have a lot of interest in existential risk, and a lot of the people there would know who I am, and I've done a lot of work there. But this is what happened. So a Miri person drove me from the workshop to Ripple's office, and then this is when Stella was for. I said like Ripple was for Stella, and I had some very interesting conversation with all the people there who the founders, and this was the thing, and Ethereum happened. So I used to be based in London, so DEFCON 1 happened. I didn't want to pay $250, so I came in during the break and saw everybody. And so I didn't get the official red T-shirt. So this time I went to DEFCON, I saw somebody wearing a red T-shirt. I was like, there was no fucking way that, sorry for my French, I wouldn't know this guy. I walk up, it's Aaron from Swarm Team. I'm like, dude. He left Swarm, so it's like, I haven't seen him in a while. He's wearing a T-shirt. So yeah, Ethereum was very tiny. So it was an EVM team, Whisper team, Swarm team. Swarm was with Tutron, Aaron, and a bunch of us. EVM team, I forgot all of them, Christian and a bunch of people. And Whisper, I can't remember all of them. Like, there was a very small team, so everybody knew everybody else. So it was mostly like, there was what I would say, you knew people in first name basis, because the teams were very small, and you kind of had the ability to reach out to people if you needed something. And I still remember the day when I was going to DevCon 3, which is in Cancun. All of us were in a van. So the Swarm guys are there. A couple of guys from the EVM team is there. And their conversation about consensus turn up. At that point in time, consensus was one of the major players in this ecosystem. And somebody mentioned that the center 8 pieces of the chessboard was being controlled by consensus. And I looked around and there was nothing happening. So a DeFi winter happened, and it really changed the dynamic. Like, it completely unshackled Ethereum from everybody's control in that sense. And Ethereum has been a very different animal since. So this is how I think about it. So I have lots of personal stories. And like all of these things are mostly stories where I've been there, where I've talked to somebody. I've kind of worked on half a dozen layer ones in total. So, Jay Kwan wanted me to join Tentam in 2015. So I couldn't join because he didn't have the money. So like, in a long story, like essentially the guy who walks around helps other people want him to join, but they don't have the money to pay him. So he takes a job at a bank.
I mean, everyone has several inception or potential forks in the road when it comes to crypto. And if I had taken this path or that path. So very very insightful. You mentioned DeFi. It's actually a great segue, because I know you're involved in DeFi. Let's talk maybe about because I think DeFi today is very different to what DeFi was, or the idea of DeFi at the very beginning. I think it would be interesting for you to give that perspective of what was the, let's call it, the philosophy initially, and how it's evolved and your view of it.
So full disclosure, I happen to know like a bunch of the early founders of various protocols. So Michael, Curve guy, he had Zero Byte. I had an advisory contract with him for that. Then he moved from that to New Cipher, and then he created Curve. So this goes to all these people. Like, I can give you names, and some of them I might have advisory relationships with them. So just to give you the rawness of the data, like, first-hand data. So when DeFi was a thing, effectively the whole idea was like, okay, we have the ability to do value transfer. It's a double entry mechanism. So this is the difference that actually happened from Bitcoin into Ethereum, right? Bitcoin is a UTXO model, and Ethereum is a double entry model. The double entry model has some good benefits, and that's like the user interface is much more simpler. UTXO model is difficult because it's like you need to actually find out where all the UTXOs are and then pull it all back, right? So, when Ethereum happened, we were all thinking there are a whole bunch of straightforward use cases, right? Where you literally do disintermediation. So that was the start of DeFi. So AMMs, DEXs, AMMs, that set of things where the first, I would call the first wave of protocols, right?
Yep.
And then, and at the same time, there's another bit that really happened, which is really the underlying thing that allowed most of these things to happen, which is essentially stablecoins, right? So
Yep.
stablecoins really allowed this. And to this day, stablecoin seems to be the highest validated use case in any situation. So when stablecoins came in, then there was all the different arbitrage mechanisms came in. So Curve happened, they happened. I remember there was a 2019 conference that was in London, and Stani was giving talks, and a bunch of other people were doing talks. And just after that, I went to DevCon in Osaka, and there was Hayden and the rest of the guys were looking at the new architecture for Uniswap, right? So, all the things actually evolved slowly and steadily. I think in 2020 is when all the DeFi really took off. And it was like everybody was looking at any arbitrage they can have and like build, like I would describe the Legoization of DeFi protocols happened in 2020. Until then, it was like you need to build all the pieces yourself. And, the composable nature wasn't there. So, if you wanted to have a stable currency, there was a bunch of stable currencies, and a lot of them had different sets of possibilities. Algorithmic stable currencies, then assets, and in the constructor oracle. So, for example, Sergey and Chainlink in 2016, I remember going to his office. It was a WeWork in New York, and and now I'm pretty sure they have a shit ton of offices all around the place.
Oh yeah,
right. And Oracle function was one of the things that were missing for a lot of the things, and he actually had the insight to create the Oracle protocols, and this became one piece. And like a lot of different pieces came in slowly and steadily, and then as people started recognizing. And at the same time, some people recognize the other bit, just gas charges was a big thing, and you need to really optimize for that. And then MEV happened. Like people from outside, people that previous exposure like me had actually talked about MEV before. Like if you listen to the, I was very much involved in the token engineering thingy initially. So the token engineering summit in Berlin in 2018, I kind of articulated some of the challenges we would have and maybe have all these problems. So, a lot of the people who did finance before clearly understood where things are to a degree. What was happening was like, there was this mapping function, a mental map. So here is a traditional finance worldview. This is an app that exists. Here is the DeFi version of it. Here's an app that exists. Can I build this one of them? And then in between, Yearn happened, and it really took off. And he became instant hero, and he had a lot of good intentions, and he showed how one could be someone who could do the right thing at the right time. I'm not agreeing with deploying protocols without testing, but I'm saying Yearn was one of the rare instances where you saw somebody who wasn't really blind on rent seeking, but really building the ecosystem. So that's
what's interesting about DeFi is it's what got me into actually got me to crypto. So I come from the Web 1, Web 2 space. A lot of built several digital based businesses mainly around paid advertising, paid media, paid traffic. And so I kept seeing around 2018 one of the best-selling books was about the future. I'm sorry?
Yeah. Was it Chris Bernanke's book or Michael Casey's book?
No, it wasn't. It was. I'll give you the name. It was extremely well marketed online.
What was that?
and it was. Let me give you. It was an Agora Publishing.
Interesting.
I know you have seen the ads.
Mhm.
Let's see. James Altucher.
I don't think I come across the person.
So he's not crypto native. What he did very
Okay.
well was he was very good at communicating it and what it is and explaining it to the masses. He was very good at that.
Yeah.
And so I saw his ads everywhere. And so me coming from being actively involved, like I ran several advertising agencies. We were like one of the we were tier one Facebook, so now Meta advertising agency in Europe. And so I kept seeing his ads everywhere. And so I was like, what is this? Let me have a look at what he's actually selling. So I went through, I was like, oh, this is interesting. And that's how I really got into an understanding. Oh, this could actually be the future of finance, right? That whole meme of DeFi. And that's what got me in. It was really because I had friends who were advertising this offer and this book online. And I was like, okay, I see it everywhere. Let me have a look. And that's what got me really into into crypto. So it's funny that it's interesting that you talk about like the two connects, right? So TradFi and kind of like this neopunk crypto nerds at the time, right?
Cypherpunk.
In 10, 15 years ago. It's the
Cypherpunk.
connection between
Yeah.
that. Yeah.
Yeah. So I think, the way I would describe is like the so-called cypherpunks were, I would say, purist, right?
Yeah.
So
Yeah.
these are the people who are probably some inclination toward mathematics, who wanted to understand society and how to use cryptography to achieve the results. And then the set of people who understood TradeFi, which understood finance as a whole,
Yeah.
and a lot of them happened after the 2008 situation, right? So 2008, post 2008, I ended up buying like 10 or 12 books on like the crash, just crash alone, right?
Yeah.
So to me, like, even though I had at that point in time been involved, like literally post crash, my assignment was go to Ireland. So I used to work for Accenture. I was sent to Accenture to look after AID. So AID was built out, right?
Yep.
So like some of us really got like a real front row seat and seeing what the hell just happened, right?
It was the
And
beginning really of the mainstream AI industry
yes,
that's happening
yeah,
today. Yeah.
yeah. And literally what has happened was like, here you go. There is one end of the spectrum where people really understood how finance happens in the real world, and they are used to the traditional backtesting,
Yep.
like millisecond trading and all the
Yep.
different things, the length of the cable and dark pools. And this
Yeah.
side, you actually have a bunch of people. They understand the dark pool, but that's in a different sense. They understand that's a mixer, which is Chaumian mixers to provide privacy. So you see a duality, two sides of the coin.
Yeah.
Same coin, doing very different things. The cypherpunk sees a dark pool as a
Yeah.
Chaumian mixer providing privacy. The TradeFi person sees a Chaumian mixer as
Yeah.
a mechanism by which they can actually do buying and selling without actually
Yeah.
collapsing the market, right? So this is how I see it. Like, two different sets of people looking at the world. The duality people say about duality of life. This is the duality of crypto.
Yeah.
Like, two sets of people on very different paths look at it and start interacting, and then this result of this interaction resulted in a lot of the things that we see right now.
Yeah. What are you when you look at DeFi protocols today and the evolution, right? I mean, I think the one thing that's been coming up actually recently with the Bybit hack was, are these DeFi protocols truly decentralized? What role does the community play when it comes to governing actions? I don't know if you saw what happened with Bybit. So
Yeah, it was one of those
what's your
instances
view on that?
where,
Yeah.
yeah, I mean, the way I describe it is like, governance is a challenge.
Yeah.
In one sense, blockchain, when you think about it, the coordination problems of humanity is one of the key things that blockchain was supposed to be helping alleviate. Unfortunately for us, what has literally happened is because of the misaligned incentives, we tend to end up choosing suboptimal solutions for bigger problems. So if you end up having a multi-sig with 3 people, 4 people, and then you have some challenges with, understanding how to connect to a secure multi-party compute mechanism or another K mechanism, like I should, then that is where things are. So this goes back to what I was describing. So a person with a cypherpunk hat on thinks of the cryptographic mechanisms in which you could actually provide this. But then somebody from the TradeFi world would actually say to you, we actually have these mechanisms. So it's called an HSM, hardware security module. If you have seen NCipher or Thales HSM, it even has a key. And you can actually have N out of K, which is like, so if there are 10, they might require 5 for you to actually initialize, right? Yep. So you need to have 5 people with the keys to actually do this thing. So literally all of this mechanisms that existed, and what has happened is like the way the adoption happened is a question. Like sometimes small things like you just cut the corners and suddenly you realize cutting corners can be very expensive. The reason the banks have all these processes, so like if you want to buy an HSM, there's a FIPS standard for it, right? The FIPS 146 standard. Like, all of this is like key because, in the past, things have happened. And then normally when these things happen, as we were describing, there's a tragedy of commons. Essentially, you and I subsidize the failure of other people, right?
Yeah.
And unfortunately, in crypto, this is the irony of ironies, right?
Yeah.
So think of this. 2008, Bitcoin was down because of the tragedy of the commons. And now, when a catastrophic failure happens, tragedy of the commons. So you go, what are we missing? This cycle is continuous, right? So I completely agree with you. And my take there is like, it's incredibly hard, especially in situations where people are working really remotely, to actually have operational security that you require, right?
Yeah.
So when you have secure buildings, you have data centers, you have hardware security modules racked in, CCTV cameras, people, guns, or whatever is required.
Yeah.
And you have disaster recovery plans where one goes down, another one comes up. When you don't have any of those things, and there is no a disaster recovery plan that everybody agrees to and everybody has to sign up to, then most of these are startups. And and I would say the largest amount of people who do DeFi protocols have never worked in a financial institution. As a very responsible person before. And suddenly they come to be responsible for hundreds of millions of dollars.
Incredible, incredible amounts of money. Exactly.
So it's like suddenly they're like, holy shit, what happened? And it takes a bit of time to really get used to this fact that you are now responsible. Somebody could sue your ass for hundreds of millions of dollars. That's this paradigm shift. But by the time it happens, mostly the truck would have gone through you, right? So that missing piece is like recognizing that with power comes responsibility. With big power comes bigger responsibility. When you are responsible for hundreds of millions of dollars, your responsibility will go way up. When you are just responsible for $100,000, your responsibility is bounded. If you're responsible for a few million, it's a few million. You might be able to pay off. When it's hundreds of millions of dollars, the odds that you might be able to pay off and walk away from the place might not be that good.
I mean, I talked about this on one of the shows. I said it's almost like an identity crisis, right? In these huge hacks. Does Thorchain, do these decentralized protocols have any say about the use of the program, of the platform, of the codes, when the whole point of it is decentralized? So yes, of course, there is an exploit and they're funneling millions, hundreds of millions or billions of dollars through these DeFi protocols. The whole point was that code was law. So how does a human being now come to stop it? That's the whole question, right? What's your view on it?
So this is where I say, law, if you observe it. So, let's think this through in the simplest of terms, right? The most common law is common law.
Yep.
Common law was never written down. So this was a king being held. So I went to Royal Holloway, and Runnymede is right across. So Royal Holloway had an information security group. Fred was an amazing person. He was the supervisor for so many things. Like, let's not go into it, but the place, the thing is, like, I can give you some context. If you've read Da Vinci Code, the protagonist, the lady, she goes to Royal Holloway, her PhD supervisor is Fred, and that Fred was my supervisor, one of my supervisors too. So this place is right next door, right, Runnymede, and that's where the king was actually forced to agree to certain things. Until then, king did what the hell he wanted, right? So the fact that we are still going back to, whatever the hell, it's a spectrum, right? It's like, one under the spectrum is king does whatever he wants to do to, okay, everything has to be fair and ordered and everything. So even now, UK doesn't have a written constitution. So you only have, a body of knowledge, right?
Yeah.
This is very tricky. And because UK was an empire where the sun never sets, it so happens that a lot of Commonwealth have English law, or common law as we call it. So it becomes very tricky, right? So it's very hard for anybody to understand law as a Boolean construct, right? And that's why we call the construct of precedence. So in a smart contract, as we were talking, we were talking with Sergey and Chainlink and oracles, right? Oracles can't do that. They just give you a Boolean, 0 or 1. So this is going to be a tricky thing. You can't expect a smart contract that works on an oracle, which returns a 0 or 1, to look at the nuances and make a decision, right?
Yeah.
So to me, there has to be exception handling. So every rule has an exception, including this one, as they say they call it, right? There's an exception to an exception. So one needs to understand, and then that has actually happened, right? Like, so when the DAO hack happened, they literally had to go back and make the changes, right?
Yeah.
So that is literally what this is. It's like, you have challenges. When you have challenges, you end up, working with it, finding ways by which, you might not have seen this before. What's the closest to what you've seen before is the pattern you copy and, do that across. So that's how I describe it.
Interesting.
So I'm kind of very nuanced in the sense of saying what is law and what is code.
No, I mean, I agree. And then it's, I was saying that it always sets a precedence. Of course, it's coming back to common laws. What do you do in this case, and how much do you use this case for the next case, and where's the limit of using the past case for the next case? That's the nuance, which is, and who gets to decide on that is also complicated to assess.
Very complicated. Yeah. It's one of the things. It's very tricky. It's a hard thing to say. You can take a very strong position. I would say, like, there is this, in my mind, is a continuum, right? There is the idealist, who I described, the flag bearers, the cypherpunks in the 1990s. They take a hard stance. They don't care about the money. And then there is a set of all people who actually did DeFi and made an alpha out of coming into crypto. They're very pragmatic, and they really, in the sense of speaking, if you think about it from a TradeFi person's perspective, any assets, the more volatile, the higher your chances of making money.
Yeah.
Right? The volatile it is, the more movement, you make more money. Which way, it doesn't matter. There's always a strategy where you can make money when things go the opposite direction. That's literally what it means. And these two worldviews, as I said, coexist. It's two sides of the same coin. Remember, I talked about, dark pools for these guys, and Xiaomi and Mixer for these guys. Same applies in Quarters law kind of thing, right? Like, these guys understand law in the sense, like, they have been to court and they understand the precedent. These guys think code is abstract, absolute, and perfect. And then, you see both sides of it. But here there's a bigger gap, in a sense, like, it doesn't really match up.
Yeah, I think it's today an unsolvable dilemma. Which ones you go to, and of course, it sets a precedent for the rest. Let's talk about AI, because I know that you're very early to. I think people today have a misconception about AI because they see ChatGPT and Claude and Ghibli yesterday, and it's amazing. I actually, I actually went to Dublin quite a bit because Facebook has the European HQ up in Dublin and London too. So Grand Canal Square, I've been there a lot, up in Ireland. All the consulting firms are up there too. What was interesting is we started getting hints from some of my friends who senior engineers about AI in 2015, 2014, 2015, when it comes to...
It was a long while back, right? So this is
Of
the
course,
paradigm
but
shift.
just to say that this is not new. So you go even way back before that. So what was your involvement like at the beginning, and
sure,
how did it evolve?
Happily hand wave. Yeah. So like very early on, I was involved. Like this is like what I call pre MapReduce. I'll talk about MapReduce in a second. So I was involved in working on intrusion detection systems for network intrusion detection systems for one of the nation states. Let's put it that way. So I was using hidden Markov models in that sense. Markov models is like, imagine you have a room, you have a machine that makes coffee or tea. First day you walk in, the coffee machine has half a probability for both. 50% chances this person needs coffee. Next time you go in, there's just one vector multiplication. There's a next update, and you get to a steady state. And when you walk in, it knows this is Matthias. Matthias is going to get coffee or tea with this probability. That's the one, right? And then in 2007, when I joined Capgemini, it so happens that I was working on something, and I needed to run a bunch of servers. And one of my managers introduced me to Andy, as in like Andrew, right? So I met him in a pub in Paddington after work, right? So Capgemini has an office nearby. He went to a pub, Andrew Jassy, that is. And then I got involved and I wrote a bunch of the standards and things like that. Along the same time, something else happened. So there was this construct called pessimistic compute and optimistic compute, right? Pessimistic compute is like every time you do something, you keep track of everything. Optimistic compute is very simple. The way I would describe it is imagine you came to Dubai, right? And you don't have a working phone in Dubai, but you met somebody and, very interesting person that you want to work with. And, Dubai has this massive directory of everybody's names. And you have 26 friends of yours that you can reach out to without using a phone, by just calling them, right? Don't ask me how you do it, but you do it. And you have a room, and you have 26 of your friends there. And then you take the directory, you tear one A and give it to a friend, and up to Z. And then you'd say to them, okay, now I'm going to read out a number. You go through your alphabet list, and if you hit the number, put your hand up. First part is called map, and the second part is called reduce. This is optimistic because you assume 26 people are going to be in the room until the whole thing finishes, right? So there are some trade-offs. And this was the basis of doing what I call the big data. Essentially, machine learning is all about linear algebra, mostly multiplication of large matrices, right? So what MapReduce allowed you to do is take a big matrix, chunk it into pieces, send it to different places, compute the whole thing, send it back, and then combine, right? So remember, you are the person that's combining it. You took the thing, sent the queries to different places, 26 places, then you waited, and it comes back, you combine, and you get the result. That's MapReduce. And that was a breakthrough. And that allowed, that plus cloud allowed, the cost per compute for all this thing. So the paradigm shift that has happened is like, compute was very expensive, right? So if you wanted to really have a 1,000-node cluster, a Beaver cluster, you are looking at hundreds of millions, right? Or maybe billions, I don't know, right? So, what cloud allowed it to do, because of the elasticity, you can have as many nodes as you want. And because of the optimistic compute, you could then shard this task and then get it computed and get the results. So this gave you the ability to have very big tasks running. And then in between around 2011, I think it was Ilya the Ilya, not the Ilya from Transformer, from the Ilya from the original Ilya from Hinton, right? Jeffrey Hinton's student. He went to Microsoft and then he started working on some of those things. And that's when deep learning turned up, and deep learning really improved. And then there was GAN in 2014. Andrew actually came up with this differential discriminator versus generator, and that was GAN, and that was another breakthrough. And then 2017 is when we actually had Transformers paper, and it so happens that the other idea, which is one of the co-authors, is a good friend of mine. He's the co-founder of Near. You occasionally have these conversations. So this, the EA bunch, like the Theodorus bunch, have always been interested in existential risk, and a large chunk of the existential risk people who are researchers in existential risk happen to be intersecting. So there is this overlap of a bunch of friends of mine, which are interested in, humanity and well-being of humanity.
What's your view on that, by the way? Humanity, AI.
It's a pretty bad. Like the odds are pretty bad for us. We've been talking about this so far, right? Like when is it that 100 people in a room have been all given a choice that they don't do or try to do comments?
Yeah.
We had 2 instances already discussed, right?
Yeah.
So I have very low confidence in humans in that sense. Like, machines won't screw other machines, I hope.
Do you think this is like the age-old question now, especially more recently, right? In the news, do you think there needs to be more oversight? If so, how? Because everything is happening so fast. Would you do something, and how do you do it to control?
So I am thinking of doing something, and I shall admit I'm kind of in alignment with Vitalik in terms of this defensive acceleration. So it is likely that I might do in that space. I've been talking to a bunch of people about this. So maybe what we need to do is like use the tools, the cryptognomic tools, cryptographic tools, and blockchains to combine all the tooling so other people can actually do things on top of it. Right now, one of the challenges we have is like coordination problem, which is one of the things that we were describing. It's kind of hard to solve in the human space. It's easy to solve because of consensus. And similarly, cryptognomic mechanism design would actually force actors to actually be incentive aligned. So you could actually make people to verify proofs and do it in a particular manner. So all of that with all the cryptographic tools that we currently have, so namely FHEs, fully homomorphic encryption, trusted execution environment, ZKs, and the MPCs in the larger sense. So all this tooling, when you actually put it all together, this could all constitute Lego blocks, which you can actually arrange in a way you want to achieve the results you want. And you might be able to, and this is what I'm thinking, and I'm hopeful of, that we might be able to have some sense of being able to understand what's happening. So there's this verifiability, then there's explainability. The verifiability is, okay, did it compute the right thing? Explainability is, how did it come to this conclusion, right? So this kind of problems are very hard for us to understand, and we need to be working really more on this to get to a place where we are slightly better off. Right now, what is happening is just like as nation state, if you have an alpha in your AI metrics, it's in the age of hybrid warfare. Is nation state versus nation state, AI versus AI. So if you have an alpha, you want to try everything to get that alpha. So that's getting regulation into that space is not going to happen. Like unless the UN turns up and says, like the Geneva Convention, don't do this. Even then, people will pass it. So, hey, I don't think we have any hope in hell.
So it's very interesting. So your view is, because the game now is nation state against nation state, there is no incentive for local jurisdictions to tamper and slow down AI.
What is the advantage? What is the economic advantage?
I agree. Yeah. I talked about this right before you joined the show. I said, the classic Charlie Munger quote, show me the incentive, I'll show you the outcome. Of course,
absolutely.
If the outcome is to win dominance, power, trade wars, why would you cap AI locally? Makes no sense.
Yep, absolutely.
So what's the consequence of that, though?
The consequence of that is...
What's your view on that?
yeah, my reaction to that is like, I've given a talk in 2016 in Data Natives in Berlin, kind of describing exactly this challenge I described.
Mm.
The AI versus AI, and if you have time, you can actually have a look. And I described to people that the real arbitrage is going to be like, who can actually get more data, who can actually get more compute, who can actually get more energy, right?
Yeah.
So that these are the three matrices you actually have, which is actually Jeff. He wrote us, early Google papers, which is like it's about the importance of data in that sense, right?
Yeah.
And then they had the paper revisited. Same time, it shows the real mode is actually having data. So the state of play of LLMs in that sense is speaking, it's like the real alpha is no longer there in some sense of speaking, and still some is there, because like the reason I was describing it is not there in some senses. Like if you look at DeepSeek and all those distillation mechanisms and other things that the smart tricks you can play, somebody else helps you without them recognizing they're helping you. So your cost of actually doing what you need to do, because like many of these multidimensional matrices are sparse matrices, and the entropy that's contained in them could be reflected in something, which is like the information theoretic equivalent, right? Like you can think of this as a map between a very sparse matrix and a channel connects you to a very dense matrix. The entropy, will be defined by this transition function. So in that sense, once you do that, that's where you are. So I honestly don't know, like, anybody who actually has the ability to be super smart, have access to TSMC, jokes about, or ASML for that matter, because ASML needs to give you that. But there's a lot of pieces, like, there's ASML who gives you the extreme UV lithography machine, the Japanese who produce the lithography thing, a large chunk of the software for verification as the US. So the humans who have expertise is like very much based in Taiwan. So all of this has to be really aligned, and then only then can you actually produce this thing. And then once you produce it, then it becomes a question of, can you have, like, it's almost like a European call option in that sense. So it's like you could think of Bitcoin mining and AI in the same sense, in a rare way of thinking. Like, you could run an arbitrage, or you could run, mining, and then pretty much both of them are kind of doing the same thing. One is doing a probabilistic thing, others more, I would say, more deterministic. Again, I know temperature function in LLMs kind of gives a randomness, but if you turn it to zero, this is a deterministic one. This is a random function, right? This is literally what is happening. And then, you're trying to get the best out of deterministic processes and random processes.
So, of course, in the West, at least, the most famous companies are all Western based, right? So OpenAI, ChatGPT is probably like has the biggest mind share in the market now. And then you see China a few weeks ago coming out of supposedly nowhere with DeepSeek. What do you see?
I think that's not true. I would strongly recommend this book to you. So
no, please.
Okay.
Okay,
this
good,
is
very
the
good.
coming wave, right?
Nice.
Mustafa Sulaiman. And if you read this, there's this chapter on strategic incentives. And what is literally it's saying is, in 2012, when Obama was a president, he kind of passed a bunch of things, kind of restricted Chinese ability to significantly improve in AI, quantum computing, and a bunch of other things, right? And what literally they decided, CCP decided, that they're going to really have advantage, and they systematically started working on it. If you read the book, what you will recognize is, like, by like 2020, 2021, they produced more papers, have more patents than the whole of US and Europe combined, right? So whether we like it or we don't like it, this is the reality. That's, you need to think about this. Like, in some sense, the democratic West has kind of lost the plot in some of these things. So you have a democracy next door to China, in India, where you have 50% of the population below 30. The highest population who speak English. Instead of them being put to good use, we try all the bullshit here and there, and then we don't really attain the optimal. And this is kind of the coordination problem I was talking about. How do we agree to optimal allocation of resources, and how do we actually, like the arbitrage is between one set of parties who actually don't allow data for the other party to look at. The other party, allows everybody to have a peek at, and they take everything, put it behind their wall, and they do whatever they want. And so if they were to have this, it's almost like a cathedral versus a bazaar kind of situation. And every now and then somebody gets out of this thing and applies a bazaar technique and then goes back in. So, DeepSeek is a classic example of the fact that they came out and say, you know what, these guys have such an advantage. If we do certain things in a certain way, they won't be able to do this. So let's leverage them, right? They won't sell us the H100s, but they would allow us to compute stuff on H100s. How smart is that?
I mean, I completely agree with you. I think that, if you look at the three, let's call them like the three poles, right? You have the US, you have Europe, and then you have China. I'm from Europe. I grew up in Europe, in Switzerland. I mean, I'm extremely bearish on the outlook of the EU when it comes to technology, progress.
It's
completely
very
stifled.
sad. It's very sad, very sad. And in many ways, like, in no, how could I say? So I used to be head of research at SRS Berlin, right? And I also still have an adjunct faculty position in Barcelona, right? And I also used to teach in MIT and CMU and other places. The difference between the graduate students and MIT or CMU versus the graduate students in other places. I've taught at Imperial and give guest lectures, KCL, UCL, you name it, all of them, right? Because I used to live in London. My friends used to teach, I go give, and I will look at this and going, UK, the education system, like I would say 1950s, 1940s, amazing. The number of Nobel laureates per capita was pretty high, right? And suddenly, what has happened? The collective West has, when I say collective West, it's like Europe and UK in that sense. They kind of became very enamored in optimizing local minima, but not the global minima, right? So, you could look back at possibly the politics of this, signal gate in the US and some of the sentiments reflected by, people in power about Europe. It shows things, right? Like Europe no longer has, like Europe at one point in time, if you look at the total amount of innovation prior to 1945.
I agree.
Pretty much 100% of it came out of Europe, right? And suddenly, flip of a switch, there's Operation Paperclip, and every German scientist was taken across to the US. Plus, that's the continuous outflow, the collapse of UK as the British Empire, and the collapse of other colonial powers, all resulted in migration towards that side. And now we reached a point where, as you described, three powers are there. But I think Europe, unless Europe really wakes up and moves the needle. So, to me, like if you look at Mika and you think, what can I say? I'm sure you know what I'm referring to here.
It's almost like they like shooting themselves in the foot over and over again, and they don't learn from shooting themselves in the foot like in the past. It's stifling and pushing entrepreneurs and investors away from Europe.
So if you simply look at the number of unicorns, I'm not saying this because of that's what it is. I've sat on the board of 2 unicorns. I've seen a lot of unicorns. The thing is, Europe absolutely doesn't allow scaling. Like, let's take a random country, say Germany, right? You cross like a 25 or 30 or whatever the number is. The moment bureaucracy kicks in, you can't even fire the person, right? And you're looking at it and going, how the hell am I going to be getting rid of this thing, right? So, you need to have the right balance. I'm not saying that, somebody who doesn't have the ability to look after them. So I am very left of the median in terms of all of this. I really want humans to have, a dignified being, be able to live and work and all those things. At the same time, world is real, right? You need to recognize the art of war was written by a Chinese. I think a few thousand years ago. If you read that, you get what is coming. And if you don't understand that, there is no mercy there. You can say anything about whatever you want, but
Yeah.
You could say talk truth to power, but that only works if and only if you have, some mechanism, whether it's cryptognomic, mechanism, incentive mechanism, or other mechanisms. The way that the world has a world order is because the US has a power, has a nuclear bombs. It has 11 nuclear carriers that can actually project power anywhere in the world. And not because of anything else, not because, the presidents of the US can smile nicely and say hello to everybody. No, that's because they can send Marines in 48 hours or 24 hours to any part of the world and then put the wood on the ground and keep the person happy. And sometimes it doesn't really align with what you actually want. And like if you read that, probably you have read the Confessions of an Economic, whatever that is.
Economic Hitman. It's a great book.
Yeah,
Amazing book.
Amazing book.
Confessions of an Economic Hitman.
That is amazing. And you read that and you go, holy crap. Right?
That's how the world works. So, I think it was probably one of the first books that really just opens your eyes of like, this is how it's run. And what's funny is you can look at the CIA website of literally like FOIA files, right? Freedom of Information Act files, fully disclosed, and you can explain that to people and say, read the official files, and they will still refuse to understand or acknowledge that that's how the world works.
I have nothing much to say about that. So I will have to leave in like 5 minutes. So,
great.
I'm very happy to have any specific questions you have. And then
sure. No, this was great. Let's end with the question that everyone wants. Actually, 2 questions. Let's have like two 2-minute questions. One is, the first one is AI, and then we'll end with crypto. AI. Do you think in the next 5 to 10 years, is it China or the US that wins the race to AI, or the AI race right now? China or US?
Okay. It is a very conditional question. I don't have a crystal ball. So these are the things I would say. Number one, let's think this through. What are the key truths? The paper that I was referring to is the unusual effectiveness of data, right? Mm-hmm. Humans to do the models, hardware to run it, and data. Yep. So who actually has the leverage on that will actually win the game. So if the EUV machines are going to be given by ASML to China, and they're able to do sub 5 nanometer nodes, and they progress things as the way they're progressing, the odds are that they might win. There's also an alternate possibility. They just take over Taiwan, take over TSMC. Yep. I'm just saying, like hypothetical. Yep. Again, same situation, no difference, right? So that is a scary but possible scenarios.
Yeah. Okay, second question, and this is the one that everyone wants to know, especially in crypto. What's your view on this cycle? What are you seeing for the next few months? What's your thesis of the next, say, 6 to 24 months when it comes to crypto?
Okay, I'll give you my 2 cents worth. I am not an investor in that sense. I don't trade. Yep. I am like the guy who's worked on like a half a dozen layer 1, 20-odd protocols, multiple zero knowledge protocols, and mostly the guy who thinks about things and talking engineering kind of thing. So to me, what is happening is like there's a competition of L1 still happening. There's a competition of L2s that's happening. The competition of L2s will have to reconcile so that the so-called partition of liquidity will kind of come to a sensible sense. And it doesn't result in L2s doing rent seeking on L1s, right?
Yeah. And
then, if the chain abstraction mechanisms really start working, then what happens is we will have, but then it doesn't really matter. That's the biggest value is in BTC, and the next biggest value is in Ethereum. If there was some mechanism to just like get 3 or 5 or whatever that is to work together, job done, enormous amount of liquidity, that will really drive the whole thing up. So the other side of the equation, is the market sentiments in that sense. And I wanted to describe this, and as somebody who has been here for a very long time, I say to people very clearly, if you are a BTC maximalist, and you were to say to me that BTC is isolated, you are completely deluded. The day, which is like 2011 or 12, I can't remember, whenever we had the first exchange, that day was the day when there was a bridge between the real world and the crypto world. And when that happens, everything else that happens here, right? Well, effectively, you can borrow money in this world and do mining on that world and get
Yep.
the ARB, right? So this is the state of affairs. So, whenever the markets are going to have challenges. So because of the economic policies in the US, because of the various, tariffs that's going to be there, if tariffs never are going to be a positive impact to humanity, to economies in that sense. So if that is the direction it's going, and if the tariff wars are going to kick off, the markets are going to come down. If markets are going to come down, definitely that will have a suppression effect on crypto.
Yep.
There might be slight variance. I don't know how much of a variance that is, but it's things like gold and other places, asset classes which are like kind of isolated, will have some differences. But I suspect to a large degree, crypto will be aligned with whatever is happening in the larger market. So I don't know where we will be if the tariff wars kicks off. We might be in an awkward position. We might not have the kind of situation where we might be having a happy outcome. So that's my 2 cents.
Got it. Thank you, Anish, for joining us. Definitely want to get you back on. This was time flew talking about AI. Thank you for joining, and we'll put all your links, everything you're involved in. We'll put that in the recording in the next few days. Thank you, and we'll talk soon.
Thank you very much. Right.
Thank you.
Okay. Bye.
All right, guys. So let's. I'm going to just do an end of show recap for everyone here. And again, what a great conversation here with Anish. I think what's interesting, and you can see how these shows go, right? So I have a few ideas, like a few points, literally, and then we just talk. And I knew that Anish had a lot of AI experience. I didn't know that he had as much. I mean, talk about an OG who's been in crypto since day one. Actually, pretty funny that he knew the group where like the meetup. Now you would call it the meetup group, but the meetup group that I first attended in 2008 in LA in Marina Del Rey in south of Santa Monica. And that's where I first heard about crypto and Bitcoin. I was very young. It was in the middle of the great financial crisis, and that's how early Anish was to crypto, to Bitcoin mining, and also his insights on AI. I think that all these topics that we cover on the show, all these headlines that we see, right, everything that we see when it comes to regulation, stablecoins, AI, DeFi protocols. Everything has a nuance to it, right? We talk about this. So like the players involved in these two industries, AI and crypto, now are so world changing / so impactful, really, that everything now comes with more nuance than before. I think that it was very interesting to hear him talk about the AI war and regulation. When it comes to AI, you'll see a lot of headlines, and we've already seen a lot of headlines when it comes to AI. And we saw Sam Altman going in front of the U.S. I think it was Senate or Congress last year, talking about regulation. And do we need to? Does the U.S. need to regulate AI? How would that work? Does the EU regulate AI? And you heard what Anish said, because now it's become a nation state's arms race, very much on the AI side. There is no incentive for countries to regulate, because why would you? Maybe you would regulate the consumer side, so the apps available to the general public, right? The chat GPTs that you use, maybe. But there is no incentive for countries to regulate anything on the AI side, because, of course, it is the present and the future of everything, right? Of exchange, of trade, of warfare, of course. That was very insightful too. Talk about DeFi. It was a great conversation. So if you just joined, I definitely recommend going through the recording. We'll have everything timestamped over the next few days. Thank you for joining, everyone. This was the CoinRock Show. We have amazing guests. We have the next guest, actually, who's my business partner at CoinRock, Lucas Demos, partner at CoinRock Media. We have a lot of a lot, and I mean a lot in capital letters, of updates coming up for all projects CoinRock that you guys know, and maybe some that you actually don't even know about. Hint, hint. A lot of things happening. So thank you for joining, guys. This was another episode of the CoinRock Show. We're on for 2 hours now. Basically, when I say an hour, it's an hour and a half. When I say I want to go for an hour and a half, it's 2 hours. You know the drill here. So we will be on. I don't know if we'll do one tomorrow. Actually, yes, we'll do one tomorrow, but US time. So it'll be probably later for Eastern and Pacific time. Later, maybe Saturday morning for European time. So we'll keep you guys posted on Twitter and in the groups. Thank you for joining. Thank you for watching. Tweet, comment, retweet this. Tell your friends, tell your neighbors, bring them to the next one. And we'll see you on the next show. Talk soon, guys. Hey, thanks for watching. If you got value from this episode, you're going to love what's coming next. So subscribe now. We drop new episodes and videos several times a week featuring power players, market movers, and insiders from the financial world. And if you want access to deals and insights we only share privately, hit the links in the description and we'll see you on the next show.